Hello everyone and welcome back to my channel. You are watching The Wealthy Brains and now let's get in this video. Rick Rule is one of the best known and most influential people in the mining business. Highly experienced investor and speculator focused on sub $100 million market capitalization, public and private issuers in natural resource industries. Rick Rule has structured, led, and participated in hundreds of privately placed debt and equity issuances for resource companies operating internationally and domiciled in Australia, Canada, Chile, Great Britain, New Zealand, Sweden, Switzerland, and the United States. Rick Rule is a sought-after investment conference speaker as well, having presented at hundreds of resource and investment conferences over the last 30 years. Silver is extraordinarily volatile as a commodity and the stocks are even more volatile. Not surprisingly, customers don't seem to mind upside volatility, but they don't like downside volatility very much, which is why the primer is useful. It's also useful because over time it's fair to say that the Sprott itself has become a brand name for silver investment and speculation. Rick said, "We manage billions of dollars in physical silver and lots of silver stock on behalf of hundreds of thousands of investors worldwide. And this discussion is particularly topical for our customer base and for people who are thinking about becoming customers of Sprott as a consequence of our long familiarity with and identification with silver." So let's start. Silver at the beginning of the discussion is unusual in that it is both a precious metal and an industrial material. And the market for silver and silver's utility to investors and speculators is a consequence of both of those phenomena. He said, "In my experience, in the last 45 years in the business, which we've discussed in the past, gold moves first because it moves based on fear. When the bull market is underway, silver moves later than gold. It's more triggered. I would suspect both by the momentum established by gold, but also by virtue of the fact that the unit cost of silver is so much lower than gold. It's been called, as an example, poor man's gold. And particularly in South Asia, Bangladesh, Pakistan, India, and Sri Lanka, silver has been regarded for centuries as both a medium of exchange and to store of value, that is to say, a real money. And those economies, the fact that the small unit price relative to gold exists is one of the things that gives it utility. I'm going to discuss a little bit more about silver's function as a precious metal later, but I think it's worth covering it as an industrial material. Because the uses for silver, the industrial and fabrication uses for silver are growing very rapidly, particularly not surprisingly as a consequence of its own low price. Meanwhile, silver is useful right now. That is, as a germicide, and there are increasing applications around the world that recognize silver's efficaciousness as a germicide. It is increasingly being woven into cloth so that its germicidal properties can be in effect worn. It is used as an ointment for wounds around the world, and it has increasing application in water pollution control equipment and purifying water. The principal use of curse used to be photography, but technology has changed all of that. And the principal industrial use for silver is in electronics fabrication, and particular in solar panels. Now, it's worth noting that the extraordinary economic slowdown that we're facing right now, this moment, is impacting silver demand from industrial applications worldwide, as the fabrication of all types of consumer and industrial materials has slowed down dramatically, particularly in China, which is the world's largest market, as we know, for solar panels. Considering silver, it is a hellishly difficult material to do market forecasting on. Hellishly, and I mean hellishly difficult for a couple of reasons. On the supply side, importantly, most silver in the world doesn't come from silver mines. It comes as a byproduct of mining other materials, including primarily gold, copper, and lead and zinc. So having a sense of byproduct supply involves making a forecast not so much about the silver market, but also about the gold market, the copper market, the lead market, and the zinc market. The second thing is that a surprising amount historically of silver that was used in the industrial applications is recycled, which is to say that scrap is often a very important source of supply. And then finally, investment supply, because so much of the above ground supplies of silver are held by living, breathing retail individuals, particularly in South Asia. Circumstances like crop failures in India literally led to this hoarding, where people who have stored their wealth in silver rather than in, say, rupiah, use their silver to, as an example, feed their family. It's been noted that good economic conditions in rural South Asia, which is to say good harvest, a lack of floods, and a lack of drought, contribute substantially to silver demand. And poor economic conditions in South Asia, particularly currency devaluations, lead to dishoarding or silver supply. What we know is that the primary determinant of the silver price in the near term is investment demand. The Sprott Metals desk reported with regards to gold that about $60 billion worth of gold was held in leveraged long commodity trading accounts. Some of that leverage as much as 33 to 1 as the ratio. We don't have the same figures for silver, but given the volatility inherent in silver, one can assume that the leverage long positions in commodity trading accounts for silver were as large or larger than they were for gold. Now that isn't to say that some of those leverage long positions couldn't be called in institutional positions. I'm sure there were in many cases institutional positions, but it isn't the sort of traditional holder that one would have looked at. For people who own either gold or silver as an investment position, this is a circumstance where leveraged long retail institutional players in commodity trading accounts were looking at volatility and probably got more than they were looking for in the near term. Rick Rule said, "Certainly, the move that described to the downside in silver, we think, can be largely attributable to two factors. One would be in leveraged long accounts when credit goes away, which is precisely what happened 2 or 3 weeks ago. Those accounts get liquidated, whether or not that holder wants to liquidate them or not. That's what happens when the credit goes away. The leveraged long accounts go away. The second thing is that we suspect that there was some expectation of reduced industrial demand for silver given the reduced level of economic activity that we're facing around the world." He has described silver as much more speculative than gold, and he thinks that somebody who intends to have a position in either physical silver, but more particularly in the silver stock, needs to self-identify as a speculator. He would also argue that the major silver producers worldwide and probably the metal itself don't qualify as investment quality assets but are much more speculative. The truth is that there is a very small population of investment silver stocks, and the most important part of speculating in silver companies is in fact stock selection. And what would we encourage people who care about the sector to do is, first of all, examine how you have your physical position, if you have one, and consider the available alternatives, particularly in today's market where there is such an extraordinary markup on the physical product, and where in fact counterfeit product is beginning to come onto the market. And then secondly, when you look at your silver stock portfolio, you really need to practice stock selection. Talk to your global broker. We know the silver business inside out, the silver equities business. Rick Rule has been in that business for 30 years. If you don't have a global broker, Rick would suggest that you get one. The truth is, if you believe that we're in a precious metals bull market, and if you believe that history repeats itself, one big beneficiary of the gold move will be silver. But the biggest benefits here could very well be silver stocks. A speculator needs to be positioned, but it's more important to be positioned in the right names. This is all for today, folks. If you enjoyed the video, then leave a like, and if you are new, then do not forget to subscribe. See you till the next video, and thank you for watching.